Hello folks, this is T. Brian Hayes here from Hayes Advisor Group with our February 2015 Educational Economic Update. In this month's video, we'll talk about some of the major economic headlines to give you some insight into what they might mean for you as an investor. Please stay tuned to the end for required disclosure statement. Financial markets continued to be a little erratic in February as overseas events overshadowed the U.S. economy. While domestic indicators show that economic growth is on track at home, investors worried about what might be brewing overseas. Europe was in focus as Greece negotiated with EU creditors for a new round of bailout money. While Greece's new leaders promised voters an end to painful austerity measures, the new agreement didn't really resolve anything. Instead, it just kicked the can down the road until the next round of credit talks. Markets reacted positively to the deal since it means that Greece will stay solvent and remain in the EU. On the domestic front, we got our look at fourth quarter economic growth and discovered that the economy grew at a slower pace than initially estimated. However, the good news is that consumer spending, one of the largest contributors to the economy, grew at the fastest pace in 4 years. Hopefully, an improving job market and low gasoline costs will continue to support consumer spending this year. Fourth quarter earnings season is winding down and the overall picture is mixed. While earnings for the S&P 500 companies were up 6.5% over the fourth quarter 2013, revenues were up just 1.6%. These numbers show that the many U.S. businesses are still struggling with weak demand. We finally got some more guidance from the Federal Reserve about interest rates. Fed Chair Janet Yellen spoke before the House and Senate and indicated that the central bank may raise rates as early as July. Though the rate rise may affect the stock market, banks may respond by raising consumer rates to compete for your business. Rate increases may also make mortgages and loans more expensive, so you may want to factor that into any major purchases you plan to make this year. In the weeks ahead, we may see volatility pick up as investors factor in interest rates, oil prices, and economic issues abroad. However, keep in mind that volatility often presents opportunities. We continually monitor markets on our clients' behalf and always have our eyes open for investment opportunities. That's it for the February Educational Economic Update, but now let's take a look at the investment markets for February. Volatility actually decreased throughout February as the markets performed real well. According to the Canterbury Portfolio Thermostat data, we were in market states 1 and 2 throughout February, and the volatility index for the macro market ended this month at 64, which is a low volatile bull market environment. As we said earlier, volatility may pick up in March, so keep an eye on our weekly market condition updates for changing market conditions. As always, if anything extreme changes, I will reach out to you personally and let you know. As always, if you have any questions or concerns about what we discussed, please give me a call at 765-452-PLAN or toll free at 1-800-939-1603. Finally, I'm hosting some Social Security educational workshops in March for those aged 55 to 65. These workshops will supply you with some updated Social Security information and inform and educate you on various strategies available to maximize your benefits over your lifetime. If you're in this age range, I highly recommend you attend, so contact us for more information. But definitely, if you're getting ready to take on Social Security or getting close, let us know you want to make sure you attend these. Once again, this is T. Brian Hayes with Hayes Advisor Group signing off for the month of February 2015. Thank you for tuning in to this month's video update and enjoy the rest of your day.